How to profit during inflation. It looks like inflation is here to stay, so it is time to make the most of it. Hello everyone, and welcome to our channel. Nobody likes to pay higher prices, but what can you do? Everything is so expensive these days, and it seems like more and more just keeps leaving your wallet. Well, it's time to make some of that money back. Today, we're going to tell you ways to profit during inflation. So let us begin the video. But to make profit during inflation, you will first need to understand what inflation is. In simple words, inflation can be described as the time when prices rise and the buying power of a currency decreases. For example, if you are able to buy 3 things with $500, you will only be able to buy 1 or 2 when inflation strikes. The Federal Reserve usually aims for a low and constant rate of inflation of around 2%, which indicates that the economy is expanding. However, economic shocks can cause inflation to reach double digits. Inflation has risen and fallen throughout history. Prices rose 10% to 15% in several years during the 1970s and 1980s. Inflation has been more or less stable since then, and we haven't seen a rise into the double digits. Inflation rates ranged between 2% and 5% in the 2000s, whereas they stabilized between 0% and 2% in the 2010s. In other words, relative to previous periods in history, prices have remained fairly constant in recent years. But after the pandemic, inflation has once again reared its head, and over the last 12 months, the inflation levels have been around 5.4%, which is one of the highest rates in many years. Even today, you may have seen that clothes and even normal groceries are more expensive than before. Well, all of this is thanks to inflation. Now, inflation has different types. The first is creeping inflation. It is the desired and expected typical, modest inflation in most economies. For example, the Federal Reserve sets its policies with the goal of achieving a 2% inflation rate. This is deemed good for the economy, and employee compensation should be able to keep up. This inflation is good as it means the economy is growing. The second type of inflation is walking inflation. During this, the level of inflation reaches the 3 to 4% mark, and it becomes a little difficult for employees to manage their finances, and people start to feel the effects in their everyday life. Finally, the last type is hyperinflation. You should pray that you never see this type of inflation in your life. This type of inflation can go as high as 20% or even more. Have you ever heard of the Weimar Republic? Well, it was the name of the German government between 1919 and 1933, and inflation there was so high that a loaf of bread that had cost around 160 marks by 1922 could cost around a number in the 12 digits. Imagine that, folks. Now, there are more technical terms like demand pull or cost push, but we're going to get into that in this video. So now that you guys understand what inflation is and what are some of its types, let us get into how you can profit from it. Real estate. During periods of inflation, single-family houses funded with low-interest, fixed-rate mortgages tend to do well. As inflation rises, the value of your home is likely to rise while the monthly service cost of your mortgage remains the same. This is at the heart of accumulating home equity, which may significantly boost your net worth. You may protect yourself from increasing rents by acquiring real estate. Rents, like any other consumable commodity, tend to grow when inflation rises. Mortgages have a benefit over rental agreements when inflation is high, despite the fact that they are less flexible. Value stocks. Now, stocks are always a good investment option, but you need to be careful about which one to choose. In times of inflation, it is better to invest in value stocks rather than growth stocks. Companies with good earnings compared to their present share price are considered value stocks. They're also recognized for having strong cash flows, which investors prize when stock prices are increasing. On the other hand, growth stocks are more susceptible to interest rate fluctuations, which is a usual monetary policy reaction to inflation. Growth stocks have had a great run in the last decade, while inflation has been glaringly absent. Value stocks, on the other hand, have recently made a resurgence. Their success is expected to continue in the current context. Commodities. Prices for basic commodities, such as oil, metals, and agricultural items, tend to rise in lockstep with inflation. Thus, they can act as an excellent inflation hedge. You should be aware, however, that commodities may be quite dangerous. Commodity prices are mostly determined by supply and demand, which may be very unpredictable. This, along with the fact that investors are taking on leverage, makes them a dangerous investment. The chances of success are enormous, but so are the chances of losing it all. Another thing that people often turn towards is gold. While gold is a good investment, you won't profit much from it. Bonds. Inflation is lethal to any fixed income instrument since it causes interest rates to rise, so investing in bonds may seem illogical. However, investors can buy inflation-indexed bonds to get around this problem. Treasury inflation-protected securities, or TIPS, are a popular alternative in the United States. The value of a TIPS investment grows in tandem with the CPI. Not only does the base value rise, but the amount of interest payments also climbs as the base value rises because the interest paid is dependent on the base value. Foreign types of inflation-indexed bonds, such as those issued by other governments, are also available. Inflation-indexed bonds can be bought by direct investment through the U.S. Treasury. Now, like everything else, there are two sides to investing during inflation. The main advantage of investing amid inflation is that your portfolio's purchasing power is preserved. The second reason is that you want your savings to continue to increase. It can also lead to diversification, which is always a good idea. Spreading a risk over a diverse group of assets is a tried and true strategy of portfolio design that works for both inflation fighting and asset growth strategies. However, alternatively, you will be increasing your exposure to risk, and to find profit during inflation, you might even diverge from your long-term goals, which is never good. So, be careful whenever you decide to test your luck against inflation. So, that is all the time we had today, folks. Hope you enjoyed this video. Do not forget to subscribe to our channel, and do hit the bell icon on your way out. See you all next time.